Welcome to Money and Purpose, a podcast exploring how to optimize your personal finances so that you can align your money with what is most important to you. I'm your host, Marianne Poon, CFA charter holder and financial advisor. Joining me today is Broc Buckles, co-founder of BC Brokerage, an independent insurance brokerage that works exclusively with fee-only financial advisors. His team helps clients secure the right coverage for their actual situations without the upsell, scanning more than 100 A-rated carriers and guiding a fully virtual client-first process. Today, we are talking about when insurance actually pays out, the pitfalls to avoid, and the one question you should ask any insurance agent before buying a policy. Hi, Broc. Thank you so much for being a guest on the show today. It's great to have you here.
It's great to be here with you as well. Thanks for having me.
So we've worked together. I've worked with your company. You guys helped me evaluate really complicated insurance policies, and I am so grateful I have you guys. So
Appreciate that.
yeah, I mean, it's nice that you work with fee-only advisors, and there must be a reason for that, right? So tell us, what is broken about the industry that you only work with fee-only advisors?
That's a really good question, Marianne. And I'll tell you, early on in our career, Peter and I, the other founder of the company, we started as college interns way back in the day at Northwestern Mutual because we didn't know any different, right? But then what it became is kind of selling insurance to friends and family, calling everybody. And to us, it sort of felt like a one size fits all solution. And we just didn't believe in that anymore. And so he left Northwestern before I did. But when I left, he came to me, he goes, "Hey, I have an idea. I've talked to these financial planners and they do financial planning. They have to make insurance recommendations. But from the ones that I've talked to, one of their biggest pain points is having someone that can actually help with the insurance where they don't have to worry about their clients being upsold and it's actually going to get implemented the same way." And so I said, okay, let's check it out. And so we started kind of working with people here locally in the Midwest and then eventually, became nationwide. So now we work with a lot of advisors in all 50 states.
Amazing. It's really nice to have a team who knows insurance policies inside and out. I talk to Rodney a lot, and he has a PhD, which is incredible. So you're in good hands.
Yeah, absolutely. Yeah. Rodney knows everything that you could possibly want to know about insurance. So I'm so happy to have, blessed and fortunate, I would say, to have Rodney as a part of the team.
So just to share a little bit about the process, is he has helped me review some life insurance policies, which has been great. I had a client who had this insurance agent forever, and they just been selling them whole life policy after whole life policy after whole life policy, and they have so many fees and all that. So it was really good to have your help to figure out how do you unwind them and get out of these most efficiently. And you can get out of them. I don't know if people know that, right?
Yeah, absolutely. I mean, a lot of times people will see, oh, there's a surrender charge, or my insurance agent told me that I had to be locked into this policy for 8 years and I couldn't get out of it. Or, you buy the policy and then when you have questions about the policy, it seems like no one's picking up the phone to answer those questions. And so, yeah, that's one of the things that we really pride ourselves on doing, is being a knowledgeable resource for people to be able to reach out to and their clients be able to reach out to say, hey, I bought this thing. And our number one inclination is always to say, why did you buy it? And if the answer is, and someone told me to, that's not a good answer, right? So yeah, we love looking at those policies and seeing what the options are, whether it's canceling the policy, keeping the policy, or a lot of people don't know, down the road, if you've had the policy for a long time, there are even options called reduce paid up, where you can actually reduce the policy, make it smaller, but never put another dollar or pay anything else into it. So it can kind of function as a smaller final expense life insurance policy or something like that. But we always say our job is not to always tell people what they need to do. We need to present the options in conjunction with the financial planner and come to an agreement somehow of what's going to be best for the client.
Right. I guess there are very rare instances where a whole life policy might make sense, right?
Yeah, I would say, long-term care planning, sometimes it's used for that. Special needs planning. And when we say whole life, that's a kind of a policy all on its own. Permanent insurance policies, though, special needs planning, sometimes there is a family member where they're dependent on their parents as a caregiver or something like that. So there needs to be money injected into a trust when someone passes away. So there are absolutely certain situations to where I'd say most products make sense, but not a one size fits all, and not everybody needs them by any means.
Right. So somebody comes to you and says, okay, I need life insurance. How would you triage that and identify which policy would be best for them?
Yeah, so just learning more about their situations. I would say, the vast majority of people that I talk to need term insurance, but it's just about asking, so what is your situation? Do you guys own a home? What's the family dynamic? What are your kids doing? Is there anybody that's going to be financially dependent on you for a lifetime? Okay, the answer is no. Okay, we just need to kind of have a financial bridge. We're probably going to go with term insurance, right? And then
Right.
we go into what are those things that we want to cover, which typically, as a general rule of thumb and an overview, are going to be let's pay off debt. Let's consider kids' education. And then let's talk about continuation of lifestyle. So, if something were to happen to one spouse, how many years do we want to replace their income to be able to continue to live as normally as possible? Obviously, it's a sad situation, but to be able to live as normally as possible and take care of some of those financial obligations.
Let's talk about long-term health care. Long-term healthcare costs are on the rise. They're so expensive. I've heard so many nightmarish situations where people try to make claims. It is insane. Like it's almost not even worth the time and the effort to go make the claims, even though they've paid like tens and thousands of dollars over a lifetime. So, can you talk about long-term care insurance? Is it worth it? What should people look for?
Yeah, absolutely. So, really good question. And it completely depends, right? What I say is a lot of times buying a long term care policy is an emotional choice, right? For a lot of people, like most choices are. But most people are exploring these types of policies, are looking into them because they've had a relative, maybe a close family member that they've seen in a long term care situation, maybe in an assisted living community or a nursing home or something like that, where they realize the toll that a long term care policy can take on your finances. So, a couple points that I always like to point out to people is number one, there are different types of policies, right? There are types of policies that are kind of connected to a life insurance policy. And then there's what we call traditional long term care. So that is basically just you sign up for a policy. If you can't hit two out of the six activities of daily living, which are, things like eating, being able to use the restroom, taking a shower, transferring, walking by yourself, then you can qualify for it. A lot of the long term care industry or product gets a bad reputation because those products are able and have been able in the past to increase in price, right? So a lot of people have heard about someone getting a letter in the mail where that long-term care policy is going to be going up by 30 or 40 or 50% next year, right? So that's where a lot of the difficulty and struggle comes with kind of wrapping your head around the policies. The new hybrid asset base or the newer policies, those can't necessarily do that. And it's not a use it or lose it. So either you go on claim and you get the money, or if you were to pass away, a beneficiary is actually going to get that money. So what we've seen is more and more people are electing to do kind of the life insurance based long-term care policies than the traditional policies. But in terms of is it right for you? Some people, again, just want to know that there's a designated amount of money that's going to pay for their long term care. And then some people are saying, hey, I'm okay if we just self fund this, right? So
Right.
we're going to carve out a piece of our investment portfolio or we're going to pay for it out of investments. The key, I think, is rather than having long term care insurance, to have a plan for long term care. And so,
Right.
what we find a lot of people do is kind of do a middle ground between self funding and having a long term care policy. So, maybe let's not try to insure everything, but let's make sure a lot of those daily expenses or actual care facilities are taken care of. And then anything beyond that that we want to do, we could self fund with the money that we already have.
Right. So, what's a sweet spot in terms of age for starting to look at long-term care policy?
I love that you asked me that question. So it's a really great deal in your 40s, right? It's still a really good deal in your 50s. Towards your late 50s, early 60s, you're going to see the amounts go up drastically in terms of how much it costs, right? And then mid 60s to early 70s, a lot of times is where we see that product become cost prohibitive to people to where they're just like, yep, I'm going to self fund. There's no way that you're going to catch me paying that much money for it. And so what I always tell people is, 40s, you're being very proactive. 50s, I would say, are really the sweet spot for a lot of people. But the important thing to keep in mind is not unlike life insurance, the two factors that it's based on are going to be your age and your health. So obviously we know every single year we're going to get older, but our health can absolutely change at any time. So the sooner the better, but I understand not everybody wants to buy it as soon as they turn 40.
Gosh, I got to start thinking about it. get a good deal. I mean, how can we even think about what healthcare costs will be like 20, 30 years down the road? It's going to be like a gazillion dollars, right?
Yeah, so, that's why we try to design the policies with flexibility and some inflation protection, right? So, cost of living adjustments, having the benefit automatically go up, every year to an extent. And then once you go on claim, having options for the benefit to increase as well is how we try to kind of build the policy. But, with that being said, I think that kind of comes down to a lot of times something is better than nothing. Even if we don't get it perfect, we were proactive in that planning. And so we're still going to be in a better spot than a lot of people that didn't think about it would be.
Right. You helped me evaluate one of my clients' policies, and there was a small nuance between, okay, this person can see their own doctor versus an appointed doctor has to,
Yep.
give the call. So, how important are those little details?
It depends on what you do. So there's different types of policies, like I mentioned, and there's different ways that the policies pay out when it comes to long-term care. So I think what you're referring to is like, are they just going to be paid for regardless, or is it going to be reimbursement? So like basically the insurance company on the traditional long-term care policies, a lot of times they can be reimbursement policies where essentially you're paying for all of these costs up front, and then you turn your receipts, for lack of a better way to say it, into the insurance company. If they say that it's reimbursement worthy, they will give you the money. Whereas a lot of the policies now with that hybrid asset based type of insurance that we were talking about are indemnity. So as soon as you qualify, essentially they're just writing you a check every month or depositing it into your bank account. So that's the kind that I like a lot more because it gives you a lot more flexibility and you don't have to wonder, when you're swiping that HSA card or writing a check if it's going to be covered.
Right. Got it. Okay. And it's the same with disability insurance. I think one of my clients had a disability policy and then it wasn't what she thought it was. Like you had to be a vegetable before it started paying out. So,
Yeah, absolutely. That's a really good point. So there's a few different things, and what that probably had was total disability definition, where basically you aren't able to do anything. And so that's not really designing a policy with a lot of autonomy. Absolutely, those policies are more affordable and cheaper. And the reason why is because you have to be completely disabled for it to pay out. So the likelihood of you being a vegetable, right, or completely disabled are very unlikely. So when we design policies for people, that's why we make sure that number one, it has an own occupation definition, meaning that it's related to what you do specifically for your work. So if you're an accountant or you're a business owner or whatever it might be, if you can't go do exactly what you need to be able to do every single day, it's going to pay out. And that's why we also put a partial residual rider, meaning that you do not have to be completely disabled for this policy to pay out because the vast majority of claims are not total disability. It might just mean that you lose 15% of the time that you can go to work, right? So it might be you're in the office 5 days a week. Now you can only go in 2 days a week because you have migraines where when you're around bright lights, you can no longer work in the same capacity and it's keeping you from working a few days a week. Well, that doesn't mean that you're completely disabled, right? It just means that you can't work the way that you were working. So that's where a partial disability policy does come into play, even if you still are able to work to an extent. So
right.
it's very important to be specific around how those policies are designed.
So there's so many choices for insurance. If somebody came to you with a blank slate, how do you help them? If they say, I have no insurance, what do you do?
Yeah, absolutely. So that's where we would just do an in-depth insurance review and try to learn as much about their situation as we possibly could, right? So a lot of times when somebody comes to us and they say, I have no insurance, what that means is I haven't bought any insurance on the private market. So we go, okay, do you have any insurance to work? And they're like, well, yeah, I do have some insurance to work. Okay, so we do have some insurance, right? Or if they actually have no insurance, we want to address the biggest potential needs first, right? So if you have no life insurance whatsoever and you have a family of four, that's probably going to go to the top of the list, right? If you're the sole income earner in the family and you have no disability insurance, so literally if you lost your job or something were to happen, we have no money coming in, that's going to be the top of the list. So just kind of understanding their situation, asking, what their plan would be. So a lot of times we ask people, X were to happen, what would you do? If the answer is, well, here's what I would do, we say, okay, you said that you would go live with your parents. Is that actually realistic for you and all your kids to go live with your parents or something? okay, probably not. Then we should probably think about taking care of that. So
Right.
just asking very intentional questions about what their plans are, what their life looks like, and how any of these potential risks would affect them. And then we get into designing the policies around the amounts and how much they might need.
Got it. So insurance is such a vague thing. Like, have you seen it actually save people? It's always a hypothetical, right? It's always like, what if, what if, what if, what if? So tell us some examples where it's actually worked.
Yeah, absolutely. So I share this story a lot of times. One of my good friends from high school, early on in my career, I told him, "Hey, one of the risks that you are really seeing right now, you're not married, right? Life insurance, you have some through work. You should probably get some of that, but what we really need to focus on is disability income insurance because if something were to happen to you, not only will you maybe not have a ton of money coming in because you did have a benefit through work, but you can lose out on your ability to contribute to retirement accounts, everything else just by being disabled for, a very small amount of time and compound interest over time. Obviously, that can make a big difference, right? And so I'm sitting there with him. I go, hey, just this disability policy, it's like $1,500 or $1,600 a month, right? And I think it was like $48 per month was the premium that he had to pay. Right. And he said, okay, fine, I'll do it. About 5 or 6 months later, he actually fell 15 feet, landed on his head, went to the hospital. His head was completely swollen, could not be around any bright light, could not look at computer screens, could not do anything for almost a year. And his policy that he had through work actually denied his claim. And so for about 7 or 8 months while he was on claim, that $1,600 benefit amount was the only money that he had coming in that entire time to be able to pay his bills and everything else that he had going on. So had he not had that, that would have made a really tough situation even more difficult. That's one example that I've shared quite a bit with people.
Nice. You have more examples?
Yeah, yeah, it's a good question. So we've currently got, I think, over 25 people actively on claim for disability policies from policies that we've written at BC Brokerage. So yeah, we've written a lot of policy over the years, but that's still a pretty substantial number of people that are actively receiving benefits from insurance companies that we've written in the past. So
Got it. How about umbrella policies?
umbrella policies, we've written a lot of umbrella policies, and we actually encountered somebody recently that was trying to buy an umbrella policy while they were actually going through a lawsuit. So that's a really good example, kind of on the other side of someone was suing them because they were injured on their property and they did not have an umbrella policy. And so they applied. They're like, okay, yeah, let's get this thing done. Da 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 da. Well, long story short, they said, are you in the middle of any existing lawsuits? And they said, actually, yes, we are in the middle of a lawsuit. And obviously that was denied. They were not able to get that. So that's a really good example of get the coverage before you need it.
Got it. Okay, so they actually do work.
They actually do work, and it's one of the best ways to insulate what you have going on. And just for anybody listening that may or may not know what they are, is essentially it's an extension of liability past your home or auto limits, right? So if your home or auto limits are exhausted, you might have $1 million umbrella policy. That is not for you. So that means if you don't have the right home limits or it's beyond, something were to happen in your house, that is not what your umbrella is for. It's for liability for anybody that might try to sue you, anybody that was hurt on your property. It's for liability for paying for other people's stuff, essentially beyond what your regular limits are going to do.
Right. So you're an expert insurance guy. How many insurance policies do you own?
That's a good question. So I have a life insurance policy. I have a disability income insurance policy. I have home insurance policy. I have a boat owner's policy. I have an umbrella policy. I have a lot of policies. I have a few car policies. I have cyber insurance policy. I have an E&O policy. I have a buy-sell agreement for the business with my business partner, Peter, that we need to update here soon. So I have a lot of insurance.
Got it. Is it possible to have too much insurance?
I would say it is possible to probably have too much insurance. If you are a single person that is making $75,000 a year, that's starting out in the world as a 22-year-old, you probably don't need $10 million of life insurance. You probably couldn't get $10 million of life insurance, but you probably don't need to be thinking about anything that would be that crazy amount of money. So yeah, I would say being overinsured, some people would argue with me on that, but I would say that being overinsured or, buying the wrong type of insurance would be even more common. So if you're in your early 20s and someone's trying to sell you a whole life insurance policy for $2,000 a month, they better have a pretty good reason as to why they're doing that because you probably don't need that.
Well, you can have one so that you can pay to borrow your own money later.
That's right. That's right. You can become your own bank. I'm
You
kidding.
can become your own bank. No. Is there anything else that you think would be good for people to know about insurance? Pitfalls, like what can they do to avoid the pitfalls? What are things
Yes.
out for?
If there's one thing that you can take from this, it's work with an independent broker. We're always happy to help, but work with somebody that has access to multiple carriers, right? And one of the biggest pitfalls that I see people make is working with what we call a captive insurance company, meaning that they're trying to sell you on reasons why you should buy a company instead of taking your situation to market and trying to fit an insurance company to your situation. So when we're looking at somebody, we say, who's going to give them the best pricing, the best value for exactly what they have going on. We're not saying, hey, you know, X carrier is what you need to do because we're the best and we have the highest amount of money that we're going to pay you. So work with an independent insurance broker that has options for you.
Got it. And can they just ask that? Are you an independent brokerage?
Yep. Absolutely. And what carriers do you work with, right? If the answer is we work with one carrier, get out of there and go find somebody else.
All right. This has been super helpful. Thank you so much, Brock. It's a
Thank
pleasure.
you. Yep. Likewise.